Mutual fund distributors are a crucial part of India's investment landscape. On one hand, they help people build long-term wealth by choosing the right investment products, and on the other, they're instrumental in driving the growth of the mutual fund industry by encouraging more people to invest via lump sums or through SIPs or systematic investment plans. But how exactly do MFDs earn money? To understand that, we need to start with the basics. See, regular mutual fund schemes have certain expenses that's part and parcel of managing money for people. This includes paying a professional who decides where to make the investments. There's office rent and other admin costs, and there's also a cost to market the fund to potential investors. All of these costs are clubbed together and the mutual fund charges a combined fee called the total expense ratio or the TER. This TER is a percentage of the investment that you make. For example, say you invest 100 rupees in a mutual fund with a TER of 1%. That means the fund will use 1 rupee or 1% of 100 rupees to cover these expenses. If the fund value grows to 110 rupees in the next year, the fund will charge 1.1 rupees as the TER, and this gets adjusted automatically from the investment. TERs can range anywhere from 0.1% to 2.5% depending on the type and size of the mutual fund scheme. Equity mutual funds typically have a higher TER. And where does an MFD fit into this? Well, since the role of an MFD is to ensure that people invest into a mutual fund scheme, they receive a share of the TER from the mutual fund company for their efforts. The fee continues as long as the investor remains in the fund and it gets paid to the MFD every month. Now, the exciting part about what makes this a lucrative career opportunity is that as the MFD's clients' investments grow, so does the income of the MFD. The more clients they serve and the more assets they manage, the higher their earnings. For example, let's say an MFD manages 100 clients who invested 10 lakh rupees each. In the first year, the MFD can earn 7 lakh rupees if we assume a modest trail commission of 0.7%. Let's say in year 2, the MFD does not add any more clients. He still has the same 100 clients. But each client's investments grow with the market from 10 lakh rupees to 12 lakhs. So, the MFD's trail commission rises too, and he will now earn 8.5 lakhs instead. And this keeps happening year after year as long as his clients stay invested and their investments continue to grow. The trail income can become quite significant over the years. Where it gets more exciting is when the MFD continues to add clients on a monthly basis. And these clients keep investing every month too. By adding just 2 clients every month who each invest 10,000 rupees via SIPs, the MFD can earn up to 36 lakh rupees a year. The opportunity to earn unlimited income is real. So yeah, with the mutual fund industry in India poised to grow exponentially in the years to come, becoming an MFD can be a rewarding career path both professionally and personally for you. And choosing Wealthy, the fastest growing platform for MFDs, makes running your business a breeze. From offering a wide variety of products to streamlining client transactions, and dedicated relationship managers are here to support you every step of the way with clear step-by-step guidance. From operational support to client acquisition and marketing material, Wealthy's app and platform can help you attract clients and grow your earnings exponentially. Sign up today.